This is really nice. So you're like from the chocolate capital of America, basically.
It
right?
really is, yeah. So
What's this chocolatier called?
these are called Wilbur Buds. So Wilbur Chocolate is the second oldest chocolate company in the country.
You had Mike at Buds.
Yes.
Okay.
I could tell.
Okay.
His eyes lit up. There's none of that in them, though.
I'm listening.
And so these Wilbur Buds actually predate the Hershey Kiss. They were actually wrapped in foil originally.
Oh, look at that. It's the same
So
shape
it's
as a
like-
kiss.
In 1890, they came out. So I think Hershey Kiss was, I don't know, like 1910 or something like that.
Okay.
My father-in-law worked at Wilbur Chocolate. So this chocolate company is right in the heart of our small town in Ritholtz, which is, I think it's on there
Oh,
somewhere.
you're going for it right now?
I want to, yeah.
What's the name of the cool little concert venue in Lancaster?
Yeah, so another cool thing, Ritholtz, where I come from, is, I don't know, last 3 out of 10 years is
It's a
the
kiss.
coolest small town in America. And one of the things is because of this chocolate company, the whole town smells like chocolate. It's right in the middle of town. The second reason is Claire Global and Tate Towers, which are the largest concert. They're the ones putting up the staging equipment, the lighting for all the big concerts internationally, from Jay-Z to Taylor Swift to Elton John. They're the ones behind it. It originated out of this small town of Ritholtz. They built a $200 million complex right out of town. And so the little airport of Lancaster is always having, Taylor Swift flying in, Elton John. They have this huge area where these artists can come in and perform like literally how they do in stadiums, but just to practice. So it's the largest venue in the world. And so you can literally go to the pub that's in Ritholtz and like you see like these random amazing artists just walking in, having a beer.
That's
stuff
incredible.
like that. The other,
That's so random. Like,
it is.
Of all the places, and I guess it has to happen somewhere.
Yeah, and I think the other random thing that makes it cool is I think we have, I think it's the third in the United States Rolex production factory right in town.
In Ritholtz, Pennsylvania. How nearby that is Banshee?
I don't know, where is Banshee?
I don't know. It's a TV show. I don't know.
Oh,
Maybe it doesn't
I don't know.
exist. These are really good. Which one did you have? The light one or the dark
I'm a
one?
milk chocolate guy.
Nicole, did you taste one?
No.
Now,
Take one.
why is Hershey
The
Hershey
lighter
and this
color.
is this? Like, there's got to be a great business story there.
There is. I mean, this company got taken over by, I don't know, 3 or 4 different
good, right?
people over the last 100 years. Now it's owned by Cargill. So they came in and, because they're like the dominant player now in chocolate, like they are in anything food, Cargill.
Now, how much THC is in these?
This
How many
is,
Not enough for Michael.
How many milligrams would you say in what I just ate? I'm surrounded by people eating the chocolate mushrooms now. Like literally, like to go out to dinner on it. It's too much for me. I don't do it, but like I don't like to be around it either.
You having dinner with Elon Musk?
No,
Yeah, I
he's
saw
on
that.
ketamine. That's like a whole other. That's a whole other thing that we can get into.
Wait,
all
but
right.
you microdose chocolate.
No, I don't do any of that
Physical
shit.
chocolate.
Yeah, no, actual chocolate.
No, you
yes.
macrodose.
I macrodose. That's right. Nailed it. Nailed it. Thank you for that. All right, how are we looking? Ready
We're
to click
looking
it up?
good. We're good.
Yeah. All right. Let's do the show already. This is an important man. Let's get rolling. Hey, John, what show is this?
Josh, big surprise today. Episode 99.
Hey, everyone. It's me, Downtown Josh Brown. I'm here with my friend Rob Passarella, and we want to tell you about probably the book that you should be reading this summer. Let's tell everyone what it's called, and then we'll get into what it's about. This is Only the Dead by Jack Carr. You are fired up about this book. Tell us why.
Josh, there's no reason not to be fired up, right? You have to really enjoy.
Strong start. Okay.
Yeah, it
Say
could
more.
be.
Say
Could
more.
be. You have to be fired up, only because is that Jack Carr is one of those authors in the thriller space now, unbelievably hot. This is his 6th book.
Okay.
He's done this 6 times already.
Okay.
And every time it gets even more intense.
Okay.
Right.
What's his background?
So this is, as you see with most authors, they come from a place of where they're writing from experience. Jack was a Navy SEAL for 20 years. Okay, like serious. Like this is like real Navy shit. This is a guy who was in the middle of Afghanistan, Iraq, the whole bit.
Okay. So the story is also been turned into a Chris Pratt series on Amazon Prime called The Terminal List. Is that based on one of the first books in the series?
That's right. The first book was basically a vengeance story, if you will, or getting even for the main character is a guy by the name of James Reese. In this case, his team gets wiped out and his family gets wiped out. And of course, it's a secret conspiracy, government cabal and business and the whole bit.
Okay.
So he takes them out one by one.
You love the book?
Love the book, love
Okay.
the author.
All right. So the book is called Only the Dead, written by Jack Carr, Rob Passarella's favorite author of the moment. And this is available where? Everywhere?
everywhere, obviously, and there's a link in the show notes. It's actually going to point out where you can get it from Simon & Schuster.
Okay, I will be reading this this summer. Rob might even read it again. Is that true?
I've read them all, so I might have to read it again, Joe.
All right, thanks so much. Thanks so much. And please check out Only the Dead by Jack Carr. Oh my God. Wow. Episode 99? Ladies and gentlemen, welcome to the Compound and Friends. This is going to be an episode where we talk about things that we really have never gotten into before. We're not going to spend an hour on the Federal Reserve. We're really going to get into investing and the nitty-gritty of investing as viewed through the prism of microcap stocks. We have with us today one of the foremost experts on the asset class. Is that fair? Could I say that?
In the top 30.
Top 30?
Yeah.
This one of the top 30 experts on microcap investing in America. I'm going to bump you up. I'm going to say top 5.
All right.
Because I don't know any of the other 29. Or maybe I do and I don't realize
They're all living in their parents' basements.
That's right. Okay. Ian Cassel is a full-time microcap investor and the CIO of Intelligent Fanatics Capital Management, also the founder of Microcap Club. Ian began his investing career as a teenager and learned from losing his money over and over again. Was Michael your mentor? Today, Ian uses his past experiences to teach people about the value in microcaps and believes that the key to outsized returns is finding great companies early because all great companies started as small companies. True.
It is.
Very few fully formed. Even the FANG stocks were microcaps at some point. They might not have been publicly traded, but that's a very important point, I feel like.
No, it is. I mean, it's one of those things you can't deny. Like every company started as a small one.
Okay. I want to talk about your backstory first because the question is like, why microcaps? Why should anybody pay attention to the space? So why don't you tell us about how you got started investing in microcap stocks?
So my origin story started when I was a teenager. So to date me, I'm 42.
Radioactive spider bite.
Exactly.
And then?
Just started making money, right?
Warren Buffett bit him on the neck.
Yeah, thank you. Yeah. Hey, Buffett started in microcaps too, but we'll get into that. But so this is like the late 90s, dot-com bubble. I was 16. My parents sat me down and said, we'd save for you around $20,000 for your college education. This is all you're getting. We wanted you to know when you're a sophomore, junior in high school, we'll open up an account with our financial advisor. We'll plop it in there. Whatever you want to do to it, you can. But this is all you're getting. So you can go in debt if you want. So basically, the advisor kind of introduced me to small cap companies, and that was the best time to get introduced to them.
This is
in
Ed
96.
Jones?
Yeah.
Is a broker at Ed Jones?
Yeah.
Okay.
So anyway, I ended up putting that $20,000 into about 3 stocks, and over the next 4 years or so, turned the $20,000 into $120,000. Thinking it was skillful when it was 150% luck.
Can I jump in?
Sure.
How did you not sell or how did you not trade? Because I feel like most novice investors, the first thing that they do is they trade. So how did you have the discipline, like at such an early age, to let 20,000 run up to 100 and not sell at like 30?
Maybe it was because I just was so inexperienced. Like I was just like caught, bit by the greed bug. So I just like let it run. Every day goes up. I mean,
yeah. So tell people what time frame that is, because that's a great question, Michael. It's important to point out this is late 90s.
Yeah.
You never felt like you needed to sell.
No, there was no point. It was just like it's just going to go up tomorrow.
Yeah.
So it doesn't matter.
Yeah.
So that's how it was. And so by the time I graduated high school, which would have been 1999. I said, well, I don't want to waste this on a college education. I'll just go to a local university, work almost full time, commute
in the chocolate mines.
Yes, in the chocolate mines, digging out the chocolate. Yeah.
Okay.
And so that's what I did. And so I went to a local university. I was able to kind of pay for it as I went. And then when I basically was working for a financial advisor, then Edward Jones during college, and I was basically a branch office administrator, glorified receptionist answering the phones. And when that bubble popped, that 120,000 turned into about 8,000. All those small cap tech stocks I owned turned into microcaps on the way down. That's how I got baptized into the microcap ecosystem.
You went in backwards.
Yeah, exactly.
Started out in small caps, they just became microcaps.
The second thing that happened was I always thought I was going to be a financial advisor. The gentleman that I was with, he had a decent sized business. So I thought he was going to good night me some assets. Open up a branch 5 miles down the road and sing Kumbaya, but kind of dealing with people's emotions during the downdraft of that time period. I kind of came out of that saying, I don't really want to deal with other people's emotions at all.
Oh, because you're answering the phones. You already see what that world is.
Exactly.
And maybe that's not the world that you wanted to be in.
Yeah, and so basically the 120 turned into 8, and I started looking at microcaps because I owned a few. And the first one I really looked at in earnest was XM Satellite Radio, which kind of was the predecessor to Sirius Satellite Radio. And in fact, XM was sort of the first one here in the United States to launch a service. But back in 2001, 2002, it was a microcap. And had about $2 billion in debt from launching these satellites up into space. They had any real subscribers at all. And the stock was 41% held short. So everybody was betting that was going to go bankrupt.
Right.
But, this was 2001, it's hard for people to remember, but terrestrial radio, you drive 20 miles out of your local area, you lose a connection, you have to find a new station. I love the story of just thinking about crystal clear radio nationwide was appeasing to me. So I fell in love with the story. It was a story stock. I saw that Hugh Panera, the CEO of XM Satellite Radio, was presenting up here in New York. Again, I'm from Lancaster, 3-hour train ride or bus ride away. And I called up the conference organizer, and I would have been maybe a junior in college. And I just said, hey, I'm Ian Cassel with Cassel Capital. I made that up. Is it okay if I come to your event? And they said, sure. I'm like, oh, okay. So, put on my suit that I wore for my high school photos. Luckily, I still fit into it. I had some fake business cards made and took a bus up here to New York. And kind of long story short, I was able to weasel my way into a one-on-one with the CEO for about 10 minutes before he had his next institutional one-on-one
He's like,
meeting.
who is this child?
Oh, exactly. Yeah.
Okay.
My eyes were as big as saucers, And so spent 10 minutes talking to him, kind of came out of that experience, just saying, oh, wow, I just want to buy this stock. So I ended up taking the bus ride home, putting $8,000 into XM at $1.78 per share.
Yeah.
And almost immediately, they started refinancing their debt, started signing other car manufacturers.
What did you say to the CEO that made him do that?
Do what? Yeah, you made it go up, right? Yeah, it was only that easy. So anyway, it ended up going from $1.78 to $34 per share in 14 months.
Which most people will invest an entire lifetime and never have that
Ever.
experience. And
No,
you
it
had
was
that
ridiculous.
at 20 years old.
Yeah, and it's
Okay.
And it was mainly due to the short covering rally because like 41% held
Still
short.
counts.
But it still counts.
That's right.
I didn't hold it obviously the whole way. And then it later merged with Sirius, and then Sirius is now kind of the one that everybody hears about, but it really
Right.
started with XM back then. And so that's what kind of started my love affair with these small public companies, that the ability for a moron like me to sit across the table from a CEO of a public company and actually gain knowledge, qualitative knowledge out of that.
Because that CEO is more likely to talk to you than the head of like Infinity Broadcasting or whoever were the giant radio companies at that time.
Exactly. Or anybody over a
Right.
billion-dollar market cap.
Are there big differences between investing in companies with the market? How do we define microcap, by the way?
Well,
now?
hold
What
on.
is it?
So hold on. Let's get into let's set this up.
What do you mean, hold on?
And I can size up the space for you.
You were asking the right question.
But it's just not coming out of your mouth.
No. I want him to tell us. So size up the space in terms of how many companies are there? What is a microcap definitionally? And like how big is the market cap overall of all of these companies
Sure.
combined?
Yeah, so here in North America, so US and Canada, there's roughly 23,000 stocks that trade publicly. Around 10,000 would be considered microcaps.
So half the market.
Almost half the market is, and that's
you know that?
sub 500 million market cap. So 500
That's a
million market cap.
microcap is 500 million or less.
Yeah, it depends if microcap is in vogue or not. Some people inch it up or inch it down if it's not.
Fair.
But usually it's around 500
So half the
million.
number of companies, but probably less than 1/2 of 1%
Well,
in market cap.
So if you would take all of those microcaps in the U.S. and Canada and roll them up into a holding company, it would be about 600 billion, the market capitalization.
Oh, okay, so not
Which
nothing.
It's not nothing.
Not nothing.
Yeah, there's eight publicly traded single companies today that have over that type of market cap. So it just shows you kind of how big and how small it is. I mean, as a whole, too, just another little thing is I think last time I looked, there was about 2.1 million jobs supported by microcap companies in North America, and that's as many as Walmart.
Wait, 2.1.
Million.
For all microcaps.
All microcaps in North America.
Yeah, so these are small. They're not just small stocks; they're small businesses. You said that 7,500 of the 23,000 public stocks in America are actually sub 100 million.
Yeah, so there's 7,500 of the 23,000 that are actually sub 100 million. market cap.
nano caps.
That would be
Right?
considered nano caps, and that's really sub 100 million is when you really start seeing like no institutional awareness of those companies.
right.
And that's also kind of the benefit to the
See,
astute
that was the
investor.
shit when I was a
Yep.
retail broker. That was the shit that we were taught to sell. nano caps,
Yeah.
and we made a market in them. And we can, like 5 firms all on Long Island, maybe one on Staten Island. We controlled.
And Boca.
We control, yeah, and a couple in Boca. We control the market. I say we. I had no idea. The trading desks in those firms controlled the market cap because there were no established market makers doing anything with them. And then there were RIPs, and that was like a whole other subcategory. But you point out 20% of microcaps are actually profitable companies.
Yeah.
35% have revenues over $10 million a year.
Yep.
Are those the ones that you focus on specifically?
Yeah, pretty much. I mean, so I'm primarily looking for, the real companies that are in that sandbox,
Right.
and my flavor of investing might be different than another microcap investor. I mean, you can find the same flavors of investing down here as you do in large cap. You have deep value, growth, people focusing on life science, people focus on this or that. You have the same things. It's just these are smaller companies.
Do you buy small caps that microcap was forced upon them, or are you buying companies that are on the way up and hopefully growing out and maturing out of that phase?
So that's a good question. So I am more drawn to rising stars, what I call them, than a fallen angel, because I like to find new ideas that haven't disappointed anybody yet.
Okay.
Rather than, there's tons of SPACs that are down from a $2 billion market cap to 80 million, but they've already disappointed 90% of people. They already still have 4 analysts covering them. They're just too known. Yeah. I'd rather find something new that has yet to have
They're messy. They're not like companies with promise. They're like companies with pissed off shareholder base.
Yeah.
You mentioned that most of the greatest investors ever started in microcaps, and most of the best performing stocks ever started as microcaps, meaning they didn't go public with a huge valuation.
Yeah. So
talk about that.
Yeah. So, I mean, Warren Buffett, Peter Lynch, Joel Greenblatt, you can go down the list. They all started their careers investing in microcaps for those same reasons.
Is that true? What was Warren Buffett's first stock purchase? It was a microcap, right?
Berkshire Hathaway itself was a microcap on an inflation-adjusted basis back when he took it over. So
it was a tiny company.
It was a microcap.
So all you have to do is find another couple of those.
Yeah, it's so easy, right?
Okay.
Yeah.
Okay.
So, but all those, I mean, it makes sense because this is where the structural advantage of the investor is that large institutional smarter money can't invest in these companies because of the illiquidity profile. It doesn't make sense for $1 billion fund to worry about a sub $100 million market cap, company that they'd have to buy, 20% of the business to even have an allocation.
Okay, 80% of the stocks that went up 10x or more between 2012 and 2022 originated out of the microcap ecosystem globally.
Yeah.
What are a few of those?
So I think it was Jenga Investment Partners out of London did a report globally on all companies between May of 2012 and May of 2022. And one of the things, I think it was like 83% of the companies that made the biggest returns originated out of the microcap ecosystem. And that was companies that trade on the Nordic exchanges from the NASDAQ, globally. But, it just shows that, the big winners come out of these small companies. And it makes sense. I mean, Caesar.
What's the biggest one that you could think of other than the XM radio example?
So on Microcap Club, which is a website that started in 2011, which basically my whole goal when I graduated college was to become a full-time private investor. And luckily I was able to reach that goal and the depths of the GFC. So it was like May of 2009, cut the cord with a couple consulting gigs I was doing. And then came up with the idea of I want to launch microcapclub.com, which was basically a private forum for experienced investors like me in this niche of investing.
Talk about these
I wanted
stocks.
to see the idea flow globally.
Yeah.
I want to get the best investors in this niche, talk about what they liked and why. And so since 2011, and again, I wasn't monetizing the site back then. It was costing me $30,000 a year just to have it and look professional, look better than what we were. I didn't monetize until like 2017. But today it's a pretty cool brand. I think it's the best one in the world, quite honestly. And one of the things we do is we track the performance of every single company that was profiled by a member. So if you're a member, you might profile a small company. It starts with a thesis.
What's a profile, like Seeking Alpha style, just a write up on a stock
quick,
that people don't know about?
2 to 3 page investment thesis, kind of on your favorite microcap. And so, just to give you some stats, so there's been 900 companies profiled in Microcap Club since the site was started. 164 of them have been acquired.
Oh, wow.
And obviously there's some big winners in there. You mentioned winners. The biggest winner is a company called Expel, XPEL. It's still a sub $2 billion market cap company today.
Okay.
But it was profiled by a member in 2014 at 36 cents per share. It hit $100 a share last year.
Wow.
Still $87 a share. So that's a 200 bagger.
Okay. And you didn't have my email or?
Well, ironically enough, this is the sad. I remember traveling around to deal. So Expel, they make the paint protection film that's on the front of cars. So if you have a high-end car or even a middle car, you probably have an option to put kind of this clear plastic film on the front of your car to protect it from rock chips. And we stumbled upon it in 2013, and it was, again, 36-cent stock, which that would have been a 8 million market cap. That's 8. Not 80,
million.
Not 800, 8.
And it's almost 2 billion, you said?
Yeah, it's about 1.7, 1.8 billion.
So wouldn't a smart strategy, I'm sure this has been attempted, so I kind of know the answer, but intuitively, wouldn't a really smart, repeatable kind of factory strategy be to buy microcaps right at the precipice of when they're crossing over into small cap? And of course, not all of them will keep going up, but of course, the one that's about to become a mid cap has to pass through small cap first. So maybe that's your filter, that's your screener. Has that kind of thing been attempted in a quantitative way before that you're aware of?
I think it has. I know a lot of people try to game the Russell inclusion, which just happened, last week?
Yeah.
Where they try to game that, a lot of these companies enter the iShares microcap index.
Yeah, so the news comes out and people piled into stocks that were right on the bubble.
Yeah.
And if you get one right, you get a 7% one-day pop.
Right, exactly.
Okay.
But I would take it not step further, I guess step back. During the GFC, I was invested in 3 companies. Again, that's when I was kind of making the transition to being a private full-time investor. 2 of them went down 50%, which was on par with the market. I think the S&P was down 52.
57.
57.
Yeah, close enough.
It's close to that. Yeah, but the other one I owned was a small, profitable, growing 10 million market cap company. It was a company called Zagg, Z-A-G-G. They made that thin plastic film for phones for the iPhone. So,
okay.
So it turned out, I remember visiting the company in Utah in July of 2008, and they were on a 10 million run rate, breaking even, and people just started buying it because the second generation iPhone was about to come out. People needed to protect their screens and their iPhone with something. And so their business went from $10 million a year to $20 million a year. It went from breaking even to earning 20 cents. And that's how you get a 10 bagger, actually. Just something that can move the revenue line 10 to 20 million and put more, earnings per share on the bottom line quickly. And that happened during that GFC when the market was tanking.
Because iPhones were brand new and growth was inevitable.
And this company the company wasn't owned by institutions, so nobody could sell it. Which was another thing I learned. So what was interesting was that company went up 280% during that time period. And it was mainly because what I learned was which institutions did come in. Institutions are always attracted to growing businesses that, can increase their earnings per share that they don't own.
Right.
And what I found is actually the smaller area of microcap is where I want to be because they're also not included in the indices. They're not owned by institutions that are getting redemptions during downturns in the market. The smaller segment actually isn't.
Like the quantum realm?
Yeah. You're right.
Watch Ant-Man?
Yeah.
You want to be in the quantum
exactly.
realm. So this area that you are involved with and that you're passionate about, it's a double-edged sword. On the one hand, this is like the dream of every investor, that they're going to buy something at 20 cents that goes to $100. What investor, at least in the beginning, doesn't dream of that? And so that's the good part, is that it has actually happened. It's not frequent, but it's possible. It is a thing that has happened. The other side of the coin, though, is because everybody is looking for that lottery-like return in stocks, there are a lot of shady operators, and they just so happen to be able to utilize microcap stocks better than larger stocks. They can move them. They can share news that doesn't exist because nobody's paying attention. They don't really have to compete with any actual, there are a lot of elements to microcaps that lend themselves to obviously people with bad intentions saying, let me get in here and manipulate something or whatever. So I know you're highly aware that there's a perception of that. You seem to be almost battling against that perception with real professional investors on a platform talking about these companies. Do I have that story right? That's kind of the yin and the yang of this?
Yeah, it is. And I don't want to paint the picture this is easy. I mean, if it was easy, I wouldn't be here. I'd be owning my own island somewhere.
Right.
It's hard to do this, and it's not a game of batting average. It really is slugging percentage, kind of like venture capital or private equity.
So you need the really big wins to outweigh the many, many, many things that go wrong.
Yeah, but it's not 0 or 1. It's not like there's zeros. I mean, a loss can be like you don't make as much money as you think. And a lot of the issues that investors face that are new to microcap investing is they focus on the story stocks that don't have revenue, that don't have profits. What I tell people new to the space, focus on the real businesses, the 20% of microcaps that actually make money.
Right. You're not looking for a biotech microcap that is putting out press releases about curing cancer.
Yeah.
You're looking for businesses.
Yeah.
Not ideas.
Why are these companies even public? Like, why be publicly traded with a market cap of $25 million?
Well, it used to be access to capital, and it's a great question because it's different from geography to geography. So here in the United States, there's fewer companies going public, but that is mainly the result. This doesn't get talked about a lot, Josh, too. It all started back in 2010. There used to be 800 reverse mergers done a year in the U.S. 800.
SPACs.
Shell companies.
They're kind of shells, yeah.
What's the difference?
So a non-public company could merge into a shell. It didn't require there to be a public offering or a SPAC going public. It was just a dead company that was had a publicly traded symbol and not much else. If you were a private company that weren't big enough to go public via IPO, you could just reverse merge yourself into one of these shells, and instantly you had a public security.
And it didn't take
It's SPAC-like. It's SPAC-like.
It was SPAC-like. Kind of eerily SPAC-like because what happened? Yeah, it was basically a public shell with nothing in it with a trading symbol. You merge a private business into it, so back until 2010, there was 700 to 800 of these done a year, where usually a company would raise $1 to $3 million, a small amount of capital, and they would just go public. What happened was there was some Chinese frauds that came public that way in 2010, many of them,
yeah,
and it kind of just put the clamp on that means of going public.
Were these shell companies like people that squat on websites, or was it companies that used to have a business that just didn't get delisted or whatever?
The SEC would let them trade for a period of time, even if there was nothing in it. And so what happened? I think this is another topic, but one of the reasons why we've seen such a decline though in public equities here in the U.S., just the amount of companies, is because it went from 800 companies going public that way to 100 in about a year. And it's been about 100 ever since then. That's 700 less companies going public.
We've spoken about this a million times, the decline of IPOs, and there used to be such more activity. But a lot of the activity was microcaps.
That's what I mean. It was this way of going public.
Right.
And yes, 90% of them shouldn't have been public, but you're still kind of law of large numbers. Maybe 20 or 30 of them ended up uplisting up to the NASDAQ.
I have another story that plays into this, which is that I was there for the changeover from fractions to decimals. Decimalization absolutely killed the microcap and small cap market in terms of listings, because back then, if you were a third tier brokerage firm, broker dealer, you would do 15, 20 IPOs a year. They were tiny companies, but the way you made your money was by taking a quarter. So you would make a market in the stock, totally legitimate. Mm-hmm. You'd make when somebody says totally legitimate, that's how you know it's not. No, this was acceptable. This was, all right, I'm the market maker in this stock. I'm a broker dealer. The stock is 10 by 10 and a quarter, right? Bid ask. I'm probably going to steal an eighth in the middle, but it's not stealing. That's like my compensation for making a market in that stock. And because I'm doing that, I want there to be as much volume in the stock as possible. How do I get volume in the stock? I hire a research analyst. The research analyst is writing reports on the company and actually paying attention. Decimalization happened in, I think, 2000. Do I have that right?
I think you're right.
So decimalization happens, and all of a sudden, there's no eighth by a quarter or a quarter by 3/8. That whole spread is gone. You have stocks basically trading a penny by 2 pennies. And with the lack of that ability for market makers to make money, a couple of things happen. Number one, the New York Stock Exchange gets hollowed out. All those guys in jackets are gone. Number two, Sherwood, all of those market making firms have to get acquired or fold. But then number three, you end up with thousands of companies where there's no more research written on them. Small cap broker dealers have no more incentive to hire analysts to cover them. So that's how you end up with a situation with all this detritus left over. Shells, empty shells trading, just a ticker symbol, no smaller IPOs, existing companies with no analyst coverage. I feel like that probably led to a lot of opportunity for people that wanted to do the work. The firms got out of the business of doing the work.
Yeah, the system stopped being greased.
Yes.
their ability to make money from these companies kind of went away. And
Yeah.
so you
I
saw that
watched
decline.
all that play out, and I was at a small brokerage firm. That was the bread and butter. You do small IPOs, support them with research, have the trading desk trade those stocks, and teach the brokers how to sell those stocks to the public. And it vaporized.
Well, and to answer your question about here in the U.S., so a lot of times, like the new ideas are just kind of like a new management team takes over an existing company, provides a capital infusion. They're kind of the new owners with a new strategy, and it becomes something new. So that's a lot of times what a new thing looks like here in the U.S. You still have real companies going public, small in Canada and Australia. So you still have companies going public doing real businesses that are profitable, raising $10 million going public. And it's kind of embarrassing because these countries have, 30 million compared to our 350 million, and they have a more fervent capital market structure for their small companies than we do, and it's embarrassing. But that's just the truth. I mean, we see tons of companies that go public that are based here in the U.S., but they list in Australia or they list in Canada.
Ridiculous.
It is ridiculous.
You have a slide here that I think does a really good job of explaining the difference between, let's say, a typical stock and a microcap stock. So you're saying this is the difference between a microcap and a midcap, but you're showing us Target, not quite a midcap.
I don't know. What's midcap?
I don't know anymore. I don't know.
62 billion? No, it's large.
62 is large.
Is that
but
large?
it, though?
It's not mega. That's large.
Apple is 3 trillion.
60
Is Target a large cap?
It's
All
a large
right.
cap, yeah.
Fine. Let's call it a large cap. But
Well, first of all, it's in the S&P 500. It's a large cap stock.
fair.
All right, fair enough. All right.
Okay.
So this was just a
All right. So what else did you get wrong? No, I was kidding.
exactly everything here.
Go ahead. Walk us through this.
Yeah, so I mean, this is just a good illustration. So, obviously you have Target on the left. You see the market cap. You see how much money is traded every day in it. You see the amount of analysts. You see how much of the float is owned by institutions. And then you see a micro cap, and this would be probably a nano cap. It's $1 a share, 51 million market cap. It trades $40,000 worth a day. There's no analysts. There's probably not an institution. I just put one on there to be fair. And
So you're saying, by comparison, Target has 1,900 institutions. They own 85% of it. 39 analysts follow it. Trading volumes, $500 million a day. Market cap, 62 billion. Right. So these are like completely different species.
well, and a lot of people would say they would look on the right, and 98% of people would be horrified at what you're looking at.
Right.
But I actually reframe that or invert that and say, in the microcap space, what you find is at least the people that are successful, you have to do your own independent research. You have to form your own independent conviction.
Because no one else is doing it.
Because no one's doing the work. And I think that actually reinforces the type of thing we need more of, from stock picking. So it's not too far-fetched also that it just creates some great investors come out of the microcap.
But isn't that harder? Because you're not competing with price-insensitive buyers or people that don't know anything about the company. You're buying from people that are selling to you who happen to know at least as much as you. Not in all cases, obviously, but these are informed buyers and sellers.
Sometimes.
Are they?
Yeah,
I would say the opposite.
Sometimes.
How so?
I would say there's
Well,
a
who cares
lot
what
of
you
dumb
say?
money in
Ian,
30-cent stocks.
No,
Is
but
that
Ian, talk
crazy to
about
think that?
I think it's situational. What I've found is there's very few people that really know what they own. You could probably say that about everything, but especially in microcap.
Myself included. Right.
Yeah.
Well, you're saying people are more likely to be gamblers in microcaps?
That's
Yeah.
my guess.
Yeah, that's predominantly what you have.
You think it's more likely to be savvy investors in penny stocks?
Yeah, if you're like, well, that's a fair point. If you're likely to speculate your ass off, I would just say you're just buying and selling Nvidia or something. Like, why go all the way down market to this?
Oh, do you hate that term penny stock? Is it a pejorative? I wanted to ask you that.
It sort of is. Yeah. I mean,
It's up, right?
so penny stock is sub $5. It really has nothing to do, I guess, with market cap, but it's sub $5.
But it sounds pejorative. It's
is.
never used in a positive way.
It isn't. Well,
Okay.
and that's the issue too.
So you say microcap very pointedly. You're not like, I'm pennystocks.com.
No,
I don't blame you. I wouldn't either.
If I would increase search results, I would say penny stocks, but
Hot
not
penny
about that.
stocks.
Yeah, exactly.
Try
the
hot
best.
Are microcaps economically sensitive the way people think small caps are? Are they interest rate sensitive? And I ask that question because at the moment, there is a small cap rally underway on Wall Street. And a lot of people are framing it as like a catch-up trade. Small caps have been absolutely trounced by large caps for the last, 15 years now. But every once in a while, they have a moment. And it seems to coincide with like economic data getting better or something with interest rates. So whether you believe in it or not, there does seem to be some sort of corollary with the economy and how small caps either perform or underperform. So I'm curious, do microcaps share that same sensitivity, or is it like the quantum realm where like they have their own laws of physics and it doesn't really behave that way?
I think it depends on what type of company you're looking at. If it's a company that needs funded, it increases the cost of capital, in this type of
Then that
environment.
will be affected.
But you could also invert that and say some of these companies are kind of dominate a niche area, geography, an area of the market where you can actually get away from a lot of the macro kind of worries because these companies are so small. It's kind of like a Zag example during the GFC. It's just like, it didn't really matter. The thing was going to grow 100% a year because it was just small. All they needed was a few more customers to grow. Even
So
in that
what the
market
data
environment.
of the GFC, like the great financial crisis forces weren't at work on the company's fundamentals.
Correct.
And therefore didn't really disturb the stock.
Correct.
Okay. That makes intuitive sense to me,
Yeah.
that you could be so small where economic forces are not relevant.
And there was no large holders in that stock to sell it. That needed
Which
liquidity
is another
from
key part of
redemptions
the
for people.
right. So you don't have mutual funds that are getting redeemed and then blowing out of the stock.
Yeah, people like blowing out of the Russells or whatever it is. Yeah.
Or how many of these stocks trade over the counter? Is it most, all?
I think there's 8,000 companies that trade on the OTC markets or thereabouts.
Could you define that for our listeners? Over the counter versus like listed. What would be your definition on both sides?
So you have companies that trade on the NASDAQ, the New York Stock Exchange, that are sub 100 million market cap.
But they're listed stocks.
They're listed stocks. It's called listed. And then you have what's called the OTC markets, which used to be called the OTCBB, which
Bulletin
used
board.
to be called the pink sheets.
Pink sheets.
Yeah.
Yeah, and that kind of another negative term.
Yeah, nobody wants to hear pink
towards
sheets.
penny stocks.
Yeah. In
but
fact, Duncan, edit this whole subject, this whole topic out. All right, go ahead.
I have a question about that. What is that referencing? Pink sheet. Where does that come from?
It was literally printed on sheet. Like, you want to tell them?
Go ahead. You're already halfway there.
I was about to make some shit up.
No, that's
No, I think it was because
I think it was printed on the
initially
sheet.
stocks were printed, and you would get printouts, and you knew the category based on what color it was printed on.
and there was also
And I think blue chip comes from the same thing, right?
I'll agree with that.
Okay.
Yeah.
I'm not 100% sure. And then BB is bulletin board. So because these stocks were not on an exchange, they would literally have to put the prices on a bulletin board, like physically. So, okay, keep going.
Even up to like the 1970s, you had regional exchanges like in Spokane or these other areas around the country.
Fucking fact checking me. Look, can
Yes.
we get a camera? The history of the pink sheets.
I was trying to provide
right.
context for the audience.
No, okay. Go ahead.
So you have a lot of companies that trade in the OTC markets, but you have a lot of big companies that trade in the OTC markets as well.
Yeah, like Nestle.
Exactly.
Okay.
Yeah,
So right, you have this whole
Roche,
other category.
yeah.
You have ADRs, but are they even ADRs, or are they just
I don't know what they're categorized as,
Okay.
but there's quite a few like really large companies that just trade
foreign
over here.
issuers of large companies, but they don't want to adhere to all of the New York Stock Exchange's rules, right?
Yeah.
So they're technically, I guess, is pink sheets the right word, or they're just OTC?
On OTC markets, there's different tiers, and basically the more transparent you are, the you move up the tiers.
Okay.
And so a lot of the upper tier is almost the same as having a New York Stock Exchange company. They still file their reports at the SEC. They're
Yeah.
still doing audited financials. They do their 10Qs, 10Ks, 8Ks, everything. They just happen to just trade on the OTC markets because it's a cheaper place to trade.
What are some of the actual differences if you're entering an order? If you're trying to buy something that trades $40,000 worth of shares a day, obviously you have to be careful not to move the stock price.
I don't think there is much anymore. Like I used to, maybe 10 years ago, I felt like it was just not as good, but now I think it's,
Thank you, Citadel.
you don't have as many algos out there kind of working against you, either on the OTC, what I've found. So I don't think it's that different anymore.
Let's throw this chart up. iShares microcap ETF, which I didn't even know that existed, versus the larger market indices year to date.
Microcap investors hate the index, right?
We do. Yeah, so this is, but I
This
wonder,
doesn't make you look good. So just for the listener, we're showing year to date, the Nasdaq's up 30%, S&P up 14%, Dow Jones up. Is that right? Dow Jones only up 2% this
Yeah.
year? Ugh. And then the microcap ETF is flat, but you don't think that that's representative of the asset class?
No, not really. I mean, the Russell microcap is, I think there's 1,400 companies in there, 70% are unprofitable. I think the worst way to own microcap is to own all of them.
Yeah. That
you
makes
know?
sense to me too.
And that's why it's a stock picker's market.
Yeah, why would you want to own them as an asset class? That's not really the benefit. The benefit
not.
is to find the ones that are legitimate
Exactly.
and not getting credit for it.
Exactly. And that's why it's hard to get real exposure to microcaps, is because mainly firms come out with a vehicle, but it's meant to scale. And honestly,
Well, that's exactly right. You know why this is not real exposure? Because I'm holding up a chart of IWC and IWM, and they're almost the exact same thing. And,
What's IWC?
microcap. And there's no reason that they should be, because
Yeah.
small caps are big companies, right?
well, and I think even in the microcap index, there's maybe 20% of them have market caps over $1 billion. So
Right.
there's-
So that's not
no,
microcap.
no. It's not really.
Okay. So Ian's going to share with us the next 3 microcaps to blow up, and we'll do that toward the end of the show. But I want to talk about some of your writing. You're a really good writer, and you don't exclusively talk about microcaps at all. You talk about investing, because in the end, the same principles. There might be differences in the way that you apply this stuff, but the same principles are in play, whether you're investing in Apple or a $30 million market cap. Like, there are some just key things about being an investor. I want to share something that you wrote in a piece called "From Hustle to Scale." You're drawing the line between something that's a hustle versus something that can really become a business. So you said what you consider scale is growing from 50 million to a $200 million market cap. So that's a big distinction for you. That's a line in the sand. Okay. You said, a mentor once told me, quote, "For a stock to double, other investors need to think it can triple. For a $50 million market cap to go to 100 million, most investors in the stock need to think it can go to 150 million. The move from 50 to 150 or 200 takes serious fundamental drivers and deliberate execution. Fundamentally speaking, for a microcap to go from $50 million to $200 million, you are looking for a management team and a business that can grow earnings from 1 to 3 million to 10 to 15 million. This isn't easy. Few microcaps can cross this chasm." Can you say more about this concept?
Yeah, I mean, in my earlier career, I made a lot of money on hustles, and I kind of got that hustle term. I mean, obviously, the word's been around forever, but Ben Beshore from Permanent, he's the one that first kind of talked about that, and we're good friends now. And it's really these companies that only have 2 or 3 kind of key people there, and they never really expand the business past that. And you
can't build a $200 million business with 3 key people.
You can get up to 10 or 20 million if they're in the right spot at the right time, and you're basically just reacting to everything. And those 3 people are wearing all the hats, from HR to garbage man to dishwasher to CEO.
Sounds like us.
Yeah, exactly.
Honestly.
Yeah. And so, but you can make decent money, in those stocks, but you just have to be aware that it's kind of like a reverse cigar butt, where there's probably 1 or 2 more puffs of growth, where you have to ask the real question: is this management team one that can really scale?
Right.
And, so now with kind of how I invest today, I'm really trying to find those companies that can scale up and out of the microcap ecosystem. That's everyone's goal. And so trying to really analyze the management teams, the culture, the processes, to see if this is something that can really become a small company.
Management is really important in this size asset. Because,
So how do you analyze that?
Yeah.
Well, a lot of it's kind of commonsensical.
You print up fake business cards.
Yeah.
Right? He told us
Exactly,
that.
yeah. So a lot of
You
it's
take a bus to New York.
It's
Go
like,
ahead.
looking for repeat winners, people that have done it before.
Yeah.
And so, I don't do a lot of screening, but I do some screening on insider purchases, that kind of alert me to a new management team putting skin in the game, taking over something and having it turn into something else. Like, that alerts me to something. So a lot of times it's diving into those management teams and seeing if they've had a history of success. So a lot of this is kind of commonsensical, like, have these people built or founded, scaled other businesses into large ones and sold them.
When you see Fortune 500 executives in press releases announcing that they're taking jobs at a microcap company, that's got to get you excited.
No.
Because it doesn't get you
No,
excited?
no.
Why?
Well, they're used to being the C-suite of Google. It doesn't really help a microcap company that's probably cash strapped.
Oh, I see. Okay.
It's like, that doesn't impress me. I want to see entrepreneurial experience, not someone that,
All right, not VP of marketing.
Correct.
Have you ever hired a private investigator?
I haven't, but I know plenty of other folks that have.
That's where the alpha is.
Well, it's not a bad idea, It's not.
Most of the investors who hire private investigators, though, are probably on the short side, not the long side. Would you agree with
They
that?
do, yeah. But I've seen both of them do it, and in some cases, I think it's money well spent.
There is, I'm sure, opportunity on the short side as there is with all areas of the market. But I would assume that there are a lot of microcaps that turn into nanocaps that go bankrupt. Are there a lot of short sellers in the space?
There's less short sellers. There's more activism. So 70% of all activism is in the microcap area.
Interesting.
Because it's easier to take over the board. It's easier to get, it doesn't take as much money.
Yeah.
It's so most activism actually occurs in the microcap level.
There's a phenomenon where sometimes an entire sector becomes microcap all at once. And I remember seeing that with precious metal stocks in the early stage of my career. In the late 90s, all the steel mills went bankrupt. But before they died, they were microcaps. We're seeing that now with cannabis companies. I looked at Canopy Growth the other day. Mike, what would you guess? Remember Canopy Growth was the hottest stock in the space? What would you guess its market cap is right now?
$2 billion?
Yeah, it's $258 million.
Wow.
So it's a microcap. And this was honestly, I'm not even making this up. People were like, that's the blue chip cannabis company. I guess they had a big investment from another large company. But this was a $41 stock 2 years ago. It's 44 cents right now.
So a company like that, I'm thinking of Bird Scooters, which had a $2 billion market cap. It's now $27 million. Those
are fallen angels.
These don't interest you.
No, not at all.
Okay, that's what I was getting to.
Yeah.
When you see a whole sector, all of the stocks become microcaps within the same year, that's got to be more like a red flag than like an opportunity.
Some people are I think it depends on how you invest. Like I'm not attracted to that.
Okay.
Some people are, if they like to look at dumpster fires and try to figure out the one that can, because
Yeah,
all,
I
all
guess,
it takes
but
is Bird to go up to 57 million market cap, and it's a double from
all the ways to make money.
No, I
that
agree.
seems to me like the most desperate and like the least appealing. It's like I'm going to buy all these pieces of shit, and like one of them won't be.
Yeah.
I don't know. I couldn't get excited about that. All right. Is there anything else that we didn't do on microcap before we get into the wider world with you?
I think we covered everything.
All right. You want to throw us a few tips?
No.
No. All right. Good. Smart.
Not at all.
I like that. This was an interesting week. We started getting a lot of data telling us that not only is there not going to be a recession in the second half of the year, but like actually things are getting better. Oddly. And I don't know how closely you follow this stuff, but I think it's important to get into some of the reports that we've seen. Mike, do you want to start with this Carl tweet?
Sure. This is Carl Quintanilla quoting J.P. Morgan's Camporeale. I don't know what that person's role is. Let's say they're an economist, I'm guessing. He said, quote, "This is what a soft landing feels like. They cut their recession odds from 40% last year to 25%. And the data just keeps coming in better than expected. There's the City Economic Surprise Index, had an explosive week. So it was a very good week for data. Durable goods, home starts. It's all trending in the right direction.
And put up this home price chart. So this is the 20 city composite growth diffusion index. It's like the biggest metropolitan area. This is Bank of America. First, it's a third month in a row where we're just seeing positive month over month growth. So year over year, home prices are negative, but over the last 3 months, things are getting better. And B of A basically says the existing home sales market is still tight due to limited inventories, but strong demand for new homes have likely added strength to the pickup in April home prices. Overall, the recent data suggests the trough in the housing market has likely been reached, and demand is helping the sector's recovery. Furthermore, the lock-in effect, homeowners unwilling to list their home due to locking in low mortgage rates, has effectively placed a floor underneath prices. Right, so this is something that everyone understands this concept. There's not enough houses. Put up the second chart, John. And people aren't willing to part with their 3% mortgage for a 7% mortgage. So this is home prices rising for a third consecutive month, but they're showing you year over year negative. So, but if that's as bad as it gets, again, combined with 3.5% unemployment, it's really hard to forecast a recession with a straight face, unless you think like that's going to reverse itself overnight.
Yeah.
I don't know. Thoughts?
What are your small business owner clients saying? Like, it's getting back to being a microcap investor. I'd rather talk to people than
None of them. I mean, I never hear stories about like a wave of client negativity, but we're skewed. We're dealing with rich people.
Yeah.
And they really didn't experience a recession, even in 2020 for the most part. So
They may have for like a month or two.
I don't think that our clients are a great canary in the coal mine for any kind of sea change in the economy. I don't think, like, if that were to become apparent, now from a business owner standpoint, that's a subset of our clients. I mean, I think people hated the supply chain stuff more than they hate anything going on now. And that seems to have run its course.
I talked to 4 people when I want to get sort of a gauge on the economy.
Buffett, Munger.
Yeah. Personal
Okay.
connections.
Paul
Yeah.
McCartney.
Yeah, exactly. My mentors. Yeah. There's 4 people. One of them owns a fairly large residential construction company.
So he's fine.
Another one owns a fairly large fleet fueling. So he's delivering diesel, all that type of thing, B2B, like even to Air Products, even large companies like
Okay.
that. I talked to, actually, my brother-in-law took over the family business that I was supposed to take over, but instead I got into microcaps. And they do basically advertising, like the McDonald's tractor trailer that looks like a Big Mac up there. Like they're the ones applying that
wow,
on there. And then I'm trying to think, who was the other one? Oh, another friend of mine he has 40 trucks that, the big, huge trucks that carry heavy equipment that have oversized load in the back.
Yeah.
I talked to him. And so it's kind of interesting because you get a pretty good gauge by talking to those 4 individuals on what exactly is happening. And yes, it's somewhat insulated because it's in Lancaster, but they all kind of go up and down the East Coast.
But
with
they
their
don't
businesses.
do AI. So
Right.
That's
Yeah,
right.
exactly. But each one of them, so the residential builder, he said that people were still buying at 6.5. They don't like 7% interest rates.
That's the ceiling.
Yeah, he's like, that's where you're starting to get really, pushback, and
Okay.
where he has to give deals. On the fleet fueling side, it was bad like back in March for some of like the dry goods side, but he said now it's kind of coming around on kind of the heavy machinery moving and stuff like that. That's kind of getting washed out because there was too many trucks on the road. It's hard to get anything. No one's saying anything bad. Like my brother-in-law's business, that it's a sizable business. Like he's just wrapping new vehicles for businesses. So
Yeah.
he's a good person to talk to because his businesses buying new trucks.
Advertising is very cyclical.
Yeah, they need to buy new trucks.
Yeah.
And he's beyond busy.
So I think there's a big difference between opinions and vibes, as it were, versus the hard data. And if you look at hard data, now stock prices are not hard data, but they're not just opinions. It's the aggregate opinion. It's what the market is. You look at industrials breaking out, materials breaking out.
John, put up the home builder chart.
Transports breaking out. Home builders going vertical.
S&P Home Builders ETF XHB up 32% year to date with what interest rates have done. So it's kind of incredible.
Well, that's a special situation
Yeah.
because home builders are the only game in town, right? Existing home sales, there are none to speak of. So you've got that. Again, I hesitate to use hard data with stocks, but if you think about like the difference between surveys and hard data, the chasm is pretty wide. So Bob Elliott tweeted, "Today starts a series of highly focused on PMI surveys that offer no actual information value. S&P Global PMI and ISM surveys have been unrelated to actual measured activity for years now in the U.S. It's a waste of time to focus on them." And so he threw up a bunch of charts, but people pay a lot of attention to this data of how purchasing managers feel about the economy.
I
and the
love
state of
this
their
take.
businesses.
I love this take.
But when you overlay it with actual data,
Nonsense.
it doesn't matter how people feel. No, it doesn't matter because you can, feelings can translate they can manifest themselves in the real economy. But everyone was waiting for the recession, right? The Fed was trying to manifest it with 10 consecutive interest rate hikes, whatever it was. They froze at the housing market, tech declining, layoffs, and we just haven't seen it. Now, there is a case to be made that there's a lag, right? Like, just because they hiked so aggressively, it doesn't mean that, like, instantly businesses are going to absorb it and react. But it's been like a while. It's been over a year. It's not in the data. People aren't getting laid off. Inflation is cooling off. You had a higher GDP revision today. Employment is still super tight. Where's the recession?
Here's the mother of all soft data. John, consumer confidence This is from Market Watch. This came out this week. Consumer confidence hit a 17-month high. A survey of consumer confidence jumped to a 17-month high of 109.7 in June, reflecting a slowdown in inflation, and fewer worries about a recession. The closely followed index increased 7.2 points from May. The May reading was the lowest in 6 months. So it's a big bounce off of a low reading. Notably, the Future Expectations Index, which is a sub-survey within that, is still below the 80 mark, which often signals a recession ahead. The index has been below that level in every month except for one in the last 16 months. Americans think inflation will continue to slow. They see prices rising 6% in the next year, the smallest reading since the end of 2020. Again, it's soft data. It's feelings, it's vibes, whatever. But it's from a lot of people. So you could say, all right, it's a survey. They'll feel better when things get better, and then vice versa. It's kind of like concurrent. But so what? It's improving.
People want a recession so bad, especially in finance. It's like,
Yeah. What is that?
I don't know what it is.
What do you think that is?
I think
Are they bored?
I think it's a few things. I think number one, people are underinvested, right? So I just think that's it's bitter, which I totally understand. If you feel like you were promised a recession, it didn't come. You thought that you were going to get bargains, it never came. I think it's the yield curve being inverted, just basic, like that tells you something. It's got to tell you something. It has to mean something. Well, maybe, maybe not. And I think you're taught that when the Fed hikes so aggressively, they're trying to cool the economy. They should be able to cool the economy, right? Like all of that jives. It makes sense. And it just hasn't happened. The idea of a soft landing seems so minuscule, like the odds of it happening, and to think that they might pull it off. Now, they might not, but it's certainly trending in the right direction.
Mm-hmm. Yeah, even I was looking at consumer debt delinquencies. It's still basically at lows.
Yeah, back to 19. Back to
there's no signal there.
back to 19
there's no
levels.
signal. Yeah.
Luke Kawa tweeted, "Recession is in a recession." As of June 23rd, weekly mentions of recession in news articles at its lowest level since April 2022, roughly cut in half versus the start of the year. And I feel like it's just the boy who cried wolf thing. You could only.
Oh, look at this.
How often can you talk about?
When did this peak, Mike? Is that July?
July 2022.
So that's when it was like obvious that we were going into a recession.
Yeah.
The most obvious. Wow. So those articles double topped. Would you would you buy that formation?
And then I think also people thought that like the banks were going to be the canary in the coal mine. There's going to be a credit crunch. Banks are going to stop lending. Housing was going to take on the economy. Commercial real estate is going to take on the economy. Well, guess what? If unemployment is below 4%, you're not going to have a recession.
Jay Powell spoke in Portugal at a central banker event on Wednesday, and this is from the Journal. Powell said because the Fed had lifted rates so quickly last year, there hasn't been enough time to see the effects of those moves in slowing economic activity and inflation. Quote, policy hasn't been restrictive for very long, so we believe there's more restriction coming. Powell said he doesn't anticipate core inflation will return to the central bank's 2% target until 2025. If that article had come out in March, the Dow would be down 1,500 points. Am I exaggerating?
No.
We don't give a shit anymore about what this guy's saying.
Well,
it's incredible.
One of the things that was also underestimated in this cycle, rightfully so by everyone, myself included, is, and this is a not BlackRock take, Bank of America take, like everyone underestimated the ability for gigantic corporations to protect their margins. And they got the memo, and they got the memo fast. And they did what they had to do, focus on free cash flow and whatever else, and they cut fat, and they did it. And so analysts expected earnings to decline by 6%, and they didn't. Everyone got offsides, too bearish. And here we are.
Now you have a new earnings season in 2 weeks. So maybe we'll do it the reverse.
Maybe.
Maybe this time everyone's expecting it to be okay and it's much worse.
Maybe.
I doubt it, but we'll see.
Well, it is that like kind of that bullwhip effect, like you said, like during COVID, everybody just got slashed because they were scared, and now they're kind of maybe over earning a little bit, but I don't know. It's just hard, like you said, to find any signal that this is a recession.
Let's do this AI thing.
I mean, this is a pretty wild chart. So this is from SocGen. They said, quote, "We estimate that AI-driven surprises led to a 3 to 4% increase in S&P 500 earnings per share this year." That's not nothing.
What does that mean? What's an AI-driven surprise?
Well, NVIDIA, for example, like, didn't they up their guidance from like 6 billion to like 11?
Yeah,
or like
yeah.
something ludicrous in the next quarter.
Ex-NVIDIA, is there anything here, or is it all that?
That's probably Microsoft too, I'm guessing.
Yeah, okay. That makes sense.
Do you know how many microcap companies have changed their names put AI in it?
Is that
was just last week,
Is
there
that
was
the
one
wave right now? Were they all blockchain 5 years ago?
Yes. Yeah.
Okay, so
Yeah.
now they're all AI.
Yeah, there's one I followed that had like it's a dog food company. There's a dog food AI. It was like I was just didn't make
Is
any
it
sense.
dogfood.ai? Is
Yeah.
that their website now?
No, I don't know. It should be, but I
So,
just,
Ian, when you're investing, and I know these you're not trading these companies, right? You're actually buying businesses, but nevertheless, you do have to be aware of the economic regime that you're in. With some companies more than others, do you think about that at all? Or are you trying to buy companies that are, more or less economically resilient, that would be less susceptible to a downturn? Or how do you think about that?
yeah. I mean, I think quality as an investment is defined by something that can grow that also can survive. And so I'm really looking for growth characteristics and survival characteristics. And on the growth side, looking for something that can grow double digits organically, for the next at least 3 years. And on the survival side, having a balance sheet that can endure a recession, has a business that maybe can grow through a recession, and also you kind of have that intelligent fanatic leadership, people that have skin in the game, that have financial resources, they can backstop the company if they have to. So it's a combination of really trying to find businesses that can grow through a recession, which you put that screen across 10,000 microcaps. There's not that many that come down the bottom of that
I would
funnel.
imagine you get only a few.
Yeah, and so it's, right now I'm very healthcare focused, just because it just happens to be a pretty good place to be if you think you're going to recession. A lot of these companies have moats because of some of the IP they have on medical technologies, things like that, and that they're also businesses that can grow 20-30% a year.
So speaking of AI, why do rich people love venture capital but hate microcaps? Aren't they basically just buying non-public microcaps?
Yeah, pretty much. I mean, it's really amazing when you think about.
So what is that about? Like, what is that dichotomy?
Yeah, microcaps are a scam, but angels investing is exciting.
Thank you. Yes,
where
exactly.
almost nothing works. Right.
These are all they're all small emerging companies, whether it's venture capital, small private equity, or microcap. Just microcap happens to be publicly traded.
Why don't we just call them public venture?
Yeah, it could be. Yeah,
right?
it should be.
Doesn't Toronto have an exchange? The Toronto
They do.
Venture
Venture Exchange. Yeah,
Venture
That's
Exchange.
That's where the microcaps
Yes.
trade. Yeah,
That's where all the microcaps trade. So the whole thing needs to rebrand. Not penny stocks, not microcaps. Public venture.
well, and I'd be willing to bet like there's probably less failure in public microcap than there is in venture capital. There's probably
You should commission that study and wave it in everyone's face. That
Yeah.
would be interesting if
well,
that's true.
and I think rich people just hate microcaps too, is because they can't actually invest in these stocks.
Oh, so I think you're wrong. I think they hate it because it's not exclusive.
yes.
If I get into a company that's being backed by Andreessen Horowitz, that has 800 million times the cachet as I bought this thing with 5 letters in the ticker symbol on the fucking Toronto exchange.
Yeah.
No one's going to think that's cool.
No, amen. I mean, that's what
Yeah.
that's the difference. You sort
That's
of-
the difference.
Venture capital, like,
John's like, that's 4 F-bombs for you. That's it. 3? All right, I got one more. I'm gonna use it when it counts. Go ahead.
no, I was going to say, like, you're exactly right. It's just like to invest in venture capital, you have to go to the right school, the right Ivy League school, know the right people, go to the right firm, have a certain socioeconomic class to be able to actually get those
Right.
deals.
And any idiot can buy
Exactly.
a microcap stock.
The whole
So-
ecosystem is open, whether you have $50 million in your bank account or $5.
Yeah, that's no good. You need velvet. I agree. You need velvet ropes.
They like the accredited investor rule, right?
Oh, they love that. Yeah. Oh, I'm accredited. Actually, I'm a qualified purchaser. You wrote this thing, Investing is Like Golf. I love this piece. You wrote it in April, but I saw
Yeah.
that you recently put it back out there. This has nothing to do with microcaps. You told a story about John Daly in particular that I thought was pretty cool. There's a story where Tiger is about to putt, and I forget the circumstances, but it was pretty important.
Yeah.
John Daly is playing like one hole over. He's not even in contention. He has as big a gallery watching him as Tiger does.
Smoking cigarettes. Yeah.
So this is you. This is a lesson. Oh, John Daly said, when people see Tiger, they see perfection. When people see me, they see imperfection. I smoke, drink, eat too much, gamble too much, failed marriages. They see it all, but they also see I'm not giving up. When people see me, they see themselves. When they see me win, they believe they can win too. God bless John Daly, right?
Yeah. No,
Yeah.
I know. It was.
That's my favorite athlete, I
Yeah.
would say.
No, he's pretty cool.
I like when he putts with the butt hanging out of his mouth.
But wait, so what does this have to do with investing? What are the parallels here?
Why don't you tell Michael?
Well, I think there was three stories in there.
Yes.
That first one was mainly just talking about, if you really want to form connection with people, you have to be vulnerable, show yourself, be authentic.
Yeah.
Smoke
you know.
cigarettes.
Yeah,
Smoke
exactly.
butts
Like,
on the golf course.
It's very rarely people that are perfect that change the world. It's usually broken people that bounce back.
Yeah. So you said, I always loved his response. You impress people with your successes, but you connect with people through sharing your struggles. If you want to build real connection, it's more important to be honest, authentic, rather than perfect. The other two lessons from your piece were you are nowhere near the best investor you can be. Inside every investor is a better investor.
So it's
a little hokey, but it's also true.
Keep telling
but
myself that.
So Zach,
That's what he says every time he hits enter.
I think that story was Zach Johnson. So Zach Johnson was a professional golfer. He won 2 majors, I think 16 times in the PGA Tour. And what made him unique was he wasn't the number 1 golfer on his high school team. He wasn't the number 1 golfer on his college team.
Yeah.
He didn't even win a collegiate tournament, but he ended up winning 2 majors, winning 16 other times. And when they interviewed the number 1, his friend that was the number 1 player on his high school and college team, they were just like, he just had this ability to get better every year. And in a sport where people peak early and plateau, he just kept getting better.
Like John Daly.
Exactly. Yeah, exactly.
And you said the third lesson you shared is golf is the sport that is most like investing and stock picking. Your opponent isn't the other players. The opponent is the golf course and yourself.
That's good.
Play your own game. Don't get distracted by what other investors are doing. Okay, so at a professional level, you kind of are competing with other people, but most people playing golf are not.
No.
Okay.
No, I mean, and I think there's this book right here.
Yeah.
I think some of the best books.
What is that book called? Tell everybody.
Golf is Not a Game of Perfect.
Who wrote that?
It's a golf classic.
Okay.
Dr. Bob Rotella.
Okay.
It's probably one of the most read books on golf. And what I found, whether it's this book or there's another one by Raymond Floyd, some of the best books about investing were written about golf because it's all mental. Any individual sport, it's mainly 90% the mental game.
So, but what do you say to the golf is like poker people or the golf is like baseball people, right? Because everyone has their favorite go-to sports. And now I like the golf one.
Yeah.
I'm not really a golfer, but that makes sense to me.
A lot of it's just like, I think the biggest lessons are just bouncing back. Golfers have the ability to hit a bad shot and just...
And you have to keep going.
Yeah.
You're going to hit a lot of shots that day.
Yeah.
Me
and
especially. I'm going to hit the most shots.
Exactly.
Right. Okay. Fair enough. Are you a golfer? You seem to be very fluent in professional golfing.
I do like golf. I don't play as much now that I have a 7 and 5-year-old at home, but I do enjoy playing.
Okay. We're going to do one more today. Everyone in Silicon Valley is on drugs is a Wall Street Journal story this week. I think it's a perfect explanation for 2021 when you in hindsight, of course, but the venture capital backed startup valuations, the crypto bubbles, the SPAC mania. If everyone here's the Wall Street Journal, Elon Musk takes ketamine, Sergey Brin sometimes enjoys magic mushrooms, executives at VC firm Founders Fund, known for their investments in SpaceX and Facebook, have thrown parties that include psychedelics. Somebody's a narc sending a Wall Street Journal report. Routine drug use has moved from an after-hours activity squarely into corporate culture. Psilocybin, blah, blah, blah. Oh, here's a great quote. There are millions of people microdosing psychedelics right now, said Carl Goldfield, a former sales and marketing consultant in San Francisco. Okay, not a doctor. He says it's the fastest path to opening your mind up and clearly seeing for yourself what's going on. This, to me, is the biggest difference between Wall Street and Silicon Valley. Let's, for argument's sake, say that there's as much drug use on Wall Street as there is in Silicon Valley. Probably different drugs. Wall Street, people working in finance would never give interviews and say that they're doing anything. Mm-hmm. That, like, to me, that's a really big difference. People in Silicon Valley are like, yeah, I'm on mushrooms right now.
I don't know if people are just bored or just don't have any fulfillment from their families or what it is.
So what drugs are you on today?
Just water and Wilbur Buds.
I don't know. What'd you think of this?
I took a microcap before I started.
You were on microcaps?
Matt Levine had a great article, and the headline was "Silicon Valley's on drugs."
Yeah, I think it explains a lot.
And it's,
not to be a dick.
Come on.
No, it doesn't.
Explains what? How?
Explains everything.
Everyone's not on drugs in Silicon Valley.
I don't think so. But the fact that it's that in the open is interesting to me. I don't care. It doesn't matter to me. I'm not giving them money. I just think that's a really big difference. You could conceivably manage billions of dollars as a venture fund and have highly placed people working there openly taking psychedelics at a party, and nobody would think twice.
The ketamine thing is interesting.
I don't think you could do that in Connecticut. running
Yeah.
a hedge fund. I just don't.
Yeah, I don't think so either.
I know there are, excuse me, there are people that will say that there are actual medicinal benefits to a little bit of mushrooms. I haven't heard that about ketamine.
No, ketamine. So, all right. So I know some shit about this. A friend of mine that I grew up with, he's in Florida. He's opened a chain of places, and it's like PTSD therapy. So it's not like they're not snorting lines of Special K like we did in the 90s. This is like supervised by nurses and doctors, but they are using ketamine for PTSD, and it's a lot of soldiers. I'm sure not everybody's showing up at these clinics, but it's legal. And right, Duncan, have you heard about this?
I've heard about ketamine a bit, but it's an anesthesia drug, right?
I think the original usage was to do surgery on pets, but they found like a psychedelic benefit to it for.
I've heard the same about magic mushrooms, psilocybin for vets with PTSD and stuff.
Yeah, they're using this as part of a bigger therapy.
Although I have heard about people microdosing like in real life and being able to like function.
Yeah.
So you take like a tiny bit, to what end, I don't know. Maybe it makes you relax.
Where is the line? So you're an expert on this stuff. Where is the line between microdosing and just dosing?
I have no
Do you
idea.
think Elon Musk? Do you think Tesla drug tests employees?
I think they do. I
Yeah,
think it
you
was
better,
funny.
you better be on drugs. Don't you come back here. You come back here negative one more time, you're
It
fired.
was in the article, something about drugs.
All right, listen, I don't really care. It's none of my business. Let people do whatever they want. Okay, did you have fun on the show today, Ian?
I did. It was great.
All right, we're going to turn on the mics and do this for real. I just wanted you to get a little bit of a feel for what it's like.
Let's keep going.
So, yeah? All right, you want to hit record? We do favorites to close out the show. And I see you've brought props, which is great. So we're going to have you go first. Tell the audience about some of the stuff that you're reading.
Well, we already hit on golf is not a game of perfect. I think we maybe hit on.
No, tell us about this.
All right. So speculation as a fine art and thoughts on life. This is.
Looks like a 30-page book.
It is about
Great.
35.
That's
this
just
was
my
Jesse
type.
Livermore's favorite book.
Okay.
That a lot of people don't know about. It was written in 1880. Really, the first 6 pages are all you need to read because that's the best part.
That's the best book I've ever heard of.
Yeah, exactly. It's a short book. I wish I
Okay.
made more of them.
Why do you like it? Why did you bring that with you today?
I don't know. It was just on my desk, and I knew we wanted to talk about something. And
Okay.
a lot of people don't realize this was. Everybody loves Jesse Livermore, and
They
rattling
think they
off his
think they do
quotes.
until they
Exactly.
actually learn something about
right,
him.
and then he killed himself. So
Yeah,
but
not,
this was his
not a
favorite
great
book.
guy.
Yeah.
Okay.
And then this is the.
Oh, yeah.
I don't know if you
All
guys
right.
read that
Oh.
one
So
yet. This is entertaining.
So this is Ringmaster.
yeah.
Is this
Vin-
new?
About Vince McMahon. I think it just came out a couple months ago. So I started reading this in the train.
Who's
ride
the
up
author?
here.
Who wrote it?
Abraham Reisman.
Did he get access? Like, are people talking to him?
It's mainly just talking to everybody but him, I think.
Vince is not talking.
Correct.
Vince should have done his own book 10 years ago.
It's crazy. Like the book starts off and it talks about like why was it in April of 2020 when the whole world is shutting down, the only thing that's open is a hospital, that there was a loophole put into the Florida legislature that allowed basically just him to have sporting events through COVID.
He was the only one.
Pretty much the
pro
only-
wrestling and nothing else.
Yeah.
Oh, I love this guy.
Yeah, exactly. And basically it was into the politics of it, but it's a good lead into it.
All right. What is it called? It's called
Called
Ringmaster.
Ringmaster.
When did this come out?
I'm only 60 pages in, so I
See,
don't know
this
if
should
the rest
be
of
this
it's
should
good.
be a movie.
I think so, too.
I know it will be a movie.
It's a crazy story.
yeah, it's only a matter of time. All right, Michael, what do you got for us?
I saw a trailer that I cannot wait to see. Here's the tweet from Hollywood Reporter. Duncan, are you shaking your head? Liam Neeson can't stop driving, or his family will explode in the first trailer for Retribution.
Didn't they make this movie Speed?
So it's like Speed. However, so I was already all the way in for this trailer.
Yeah.
I'm like, sign me up. Liam Neeson doing anything I'm in. But then you find out that he's being targeted because he was like a money manager that didn't do so well.
Oh.
Now I'm really in.
His performance wasn't good.
Yes.
I'm reeled in.
Oh, Ian, what's the Pando tree system? Tell us about this.
How old
this
is Liam
drugs?
Neeson?
How old?
Yeah.
73.
Wow.
What do you think?
Still doing action flicks, huh?
He's still he's a tough
he's
son of
awesome.
a bitch. What's the Pando tree system?
So
John, can we put this picture up on screen? Okay, tell us about this.
This is really random.
He's 71. Same thing.
So this is the Pando tree system. It's a clonal tree system, which basically means that it's 100 acres of trees. Each one of these trees is genetically identical to the next one, and they're all use the same root system. It's one
They're
giant.
all of those are
all of
connected
them.
underground.
100 acres. Yes.
Where is this?
This is in Utah.
Okay, is that the only place where this is?
There's like 2 or 3 other places on Earth where they have these clonal tree systems. This is one. It's supposedly like the second oldest organism on Earth and the largest organism on Earth. But it's 100 acres and it just keeps
How
on
old do we
expanding.
think this is?
100,000 years, they say.
This is 100,000 years
That's
old.
what they're saying,
And
yeah.
every season it comes back?
The leaves turn yellow in the fall, and I guess they're really flat and really rigid, so like just a little bit of breeze goes through them. It makes this rustling. It's called the trembling giant. And I've never been there, but they
And
say
this is all one organism.
it's one organism.
Hold on,
if
Ian,
I
are you,
cut
are
one of
you
these
high
down,
right now?
do
Is
the-
that why we're talking
I know.
about
I was like, this is not good timing for me to explain this.
If I cut one of these down, though, do the other ones like feel it? I mean, I know they don't feel it, but like, is there an effect if you screw with one of these trees?
I have no idea. I didn't dig into it that far, but it was something that was new to me, and I often thought it'd be surreal to like just go in the middle of this thing and just like look around and be like, this is one giant thing.
Yeah, that's kind of cool. It must
Yeah.
be one of the largest organisms on Earth.
It is.
Also,
I think the largest is like some
coral
algae thing or
coral
something.
reef.
Yeah,
maybe.
it could be. Yeah.
Okay. All right. Very, very cool. My favorite, very simply, the best show of the summer. And if you're not watching it, I feel bad for you. So I'm gonna put you onto this if you don't even know. It's on Hulu, but it's an effects show called The Bear, and it's season 2. Season 1 was amazing, and this is even better than the first season. Is anyone in this room aware or watching the show?
Aware.
Oh my God.
It's the show about the guy cooking.
Yeah.
in a
It's
kitchen.
about so much more than that, Duncan.
I didn't
It's
love the
about-
first
It's
season.
about life.
Everybody else did.
You didn't love the first season? Did you half watch it with a phone?
No, I
Or-
watched it. I don't know why. It just didn't click with me for some reason. Everyone loves it.
Okay, well, it's exploding in popularity
Yeah.
now, and a lot of people that missed the first season or didn't appreciate it are going back.
I'm gonna try the second.
It's very, very good. It's like it's a very high end chef who ends up back in his family business, which is like an old school Chicago beef sandwich.
Yeah.
The characters are written really well. The actors are all amazing in their role.
Is it the same cast?
It's the same cast, but they've added people. And actually, we just learned that Jamie Lee Curtis joined the cast, and she's playing the mom
Oh, nice.
of this family. So,
Is Bernthal in it?
no, he was in it last season,
Yeah.
but he was a flashback. You just ruined that for everyone.
No, I didn't.
Anyway, if you are interested at all in food or Chicago or Wilco, which is very heavily represented in the soundtrack, everything about the show is your vibe. So highly recommend. Okay, we're gonna wrap it up from here. Ian, I want to tell people where they could follow you and where they could learn more about your style of investing and the Microcap Club. Where should they go?
I'm on Twitter. My handle is my name, Ian Cassel. And,
Okay, that's CASSEL.
yes, IANCASSEL.
Okay, perfect. And what about the site?
And you can find me on microcapclub.com.
Okay, and what do you do at Microcap Club? You write? You have a blog?
Yeah, we have a blog there.
Okay.
That's where we have probably 250 of the best microcap investors on the planet just talking about what they like and why.
Look at that. Hey, you crushed it on the show today. We appreciate you coming all the way from Lancaster. Thank you.
My Amish buggy and all. So.
We're gonna get into the chocolates in a little while. Duncan, any announcements?
So I have one review to read.
Let's do it.
I know Jill listens to all of our shows, so this one's
Hi,
for
Jill.
her. Put Mom on the Phone wrote, Jill is the perfect addition, guys. Usually like your show, really love it when Jill S is on.
We can't afford to hire Jill full time, but we'll definitely have her back. Thank you for that comment. We appreciate it, guys. All right, everyone, that's it from us. Thank you so much for listening. Make sure to subscribe to the show, like the show, favorite the show, wherever you listen on your favorite podcast platform. Ratings and reviews go a long way. We will be back next week with all new shows. Stick around. We'll see you then. Thank you so much.